Can Kikoff hurt your credit? This is one of the most common and important questions people ask before signing up, especially if you are trying to build credit safely and avoid mistakes. In this video, I will break everything down clearly, based on how Kikoff actually works, when it can help you, and the situations where it could hurt your credit if you are not careful. If you are considering Kikoff, already signed up, or comparing credit builder apps, and want to know if Kikoff is legit, worth it, and safe for your credit score, this explanation will help you make a smart decision. Let us start with the short answer. Kikoff does not hurt your credit by default. In fact, it is designed to help people build or rebuild credit. However, like any credit-related product, it can hurt your credit if you misuse it or ignore the rules. The key is understanding exactly how it reports to the credit bureaus, and what actions affect your score. Kikoff is a credit-building platform, not a traditional loan or credit card. When you sign up, Kikoff gives you access to a small credit line or a secured-style account. You are not receiving cash, and you are not borrowing money in the usual sense. Instead, Kikoff reports a monthly payment history to the major credit bureaus, usually Equifax and Experian, and sometimes TransUnion depending on the plan. Your credit score is influenced by a few major factors. Payment history is the most important one. Credit utilization is another big factor. Length of credit history, credit mix, and new inquiries also play roles. Kikoff mainly helps with payment history and credit utilization, which is why it can be effective for beginners. Now, here is where people get confused. Kikoff can hurt your credit if you miss payments. Even though the monthly amount is usually small, missing a payment can be reported as late. A late payment stays on your credit report and can lower your score, especially if your credit profile is thin or new. If you set up Kikoff and forget to pay, or you rely on manual payments and miss the due date, that is one way it can negatively affect your credit. This is why automatic payments are extremely important when using Kikoff or any credit builder. Another situation where Kikoff can hurt your credit is if you cancel too early without understanding the impact. If Kikoff is one of your first credit accounts, closing it too soon can reduce your average account age. That does not always cause a big drop, but for new credit users, it can have a noticeable effect. There is also confusion around credit utilization. Kikoff usually reports a low utilization ratio, which is good. However, if you upgrade to plans that involve higher limits or add-ons and you do not manage them properly, your reported utilization could increase. High utilization can temporarily lower your score, even if you are paying on time. Let us also talk about credit inquiries. Kikoff typically does not perform a hard inquiry when you sign up. That means signing up usually does not cause an immediate credit score drop. This is a major reason many people choose Kikoff over traditional starter credit cards. So when does Kikoff actually help your credit? It helps when you make on-time payments every month. Over time, those positive payments build a strong payment history. This is especially powerful if you have no credit, bad credit, or limited credit history. Kikoff can also help lower your overall credit utilization ratio, which can give your score a boost. This is useful if you already have other credit accounts with high balances. Another benefit is consistency. Kikoff reports monthly, and consistency is what credit scoring models reward. Many users see gradual improvements after 3 to 6 months, assuming everything is paid on time. Now let us address the big buyer intent question. Is Kikoff worth it? For people who cannot get approved for a traditional credit card, or who want a low-risk way to build credit, Kikoff can be worth the monthly cost. The pricing is relatively low compared to secured credit cards that require upfront deposits. However, Kikoff is not magic. It will not fix bad credit overnight. It will not remove negative marks from your credit report. It is a tool, and like any tool, it only works if you use it correctly. If you already have strong credit, Kikoff may not add much value. But if you are starting from zero or rebuilding after mistakes, it can be a smart stepping stone. To avoid Kikoff hurting your credit, follow a few simple rules. Always enable autopay. Never miss a payment. Keep the account open long enough to build history. Do not sign up and then ignore it. Treat it like a real credit account because it is reported as one. So, can Kikoff hurt your credit? Yes, if you miss payments or misuse it. Can Kikoff help your credit? Absolutely, if you use it responsibly and consistently. If you are thinking about signing up, compare Kikoff pricing and features with other credit builder options, decide if it fits your situation, and only proceed if you can commit to on-time payments. If this explanation helped you understand whether Kikoff is safe, legit, and worth it, make sure to like the video and subscribe for more honest credit and finance breakdowns.